So yesterday was a big deal on Wall Street. Now, we saw the markets rallied over 1,200 points in what is being described as one of the best sigh of relief rallies we've ever seen, with more than likely a combination of factors contributing to these results. The CPI report, the inflation report, which came in better than expected, and experts say that it should be noted that midterm rallies are one of the best seasonal rallies, and particularly with a Democrat with their first year in office, because historically those years typically end up being bad for the markets. However, the big story here, the overwhelming headline, is that billions of dollars are at risk, and they are at risk from the possibility of fictitious value that has been printed or created using what can only be described as the infinite money glitch, and to a far worse degree than Jerome Powell and the Federal Reserve have been doing over the last few years. No, this is 10 times or maybe even 100 times worse, and I'm going to explain why in just a moment and discuss what this could all mean for investors, businesses, banks, central banks, the SEC, and also everyday folks who don't typically get involved in any sort of investing, let alone cryptocurrency and stablecoins. And we will be hearing from the likes of Stefan, who was a sponsored promoter of FTX.us, and discuss others like Steph Curry, Tom Brady, the Miami Dolphins, Major League Baseball, and others' involvement in this potential FTX liquidity crisis and nightmare that is setting the stage to wipe out billions of dollars from the asset columns of many, with their leader, Sam Bankman-Fried, currently assumed to be on the run and only in communication with frozen account holders and lawyers, and the SEC, who are out for blood through Twitter communication only. Now, I wonder if he applied for and bought his verified blue Twitter check from Elon Musk for $8. And I want to quickly thank today's video sponsor, the like button. So if you haven't already, please go ahead and smash that like button and subscribe to the channel too. And to show my appreciation for doing that, here's a clip of a kitten stretching its legs. So thank you all so much for your love and support. Now let's get right into the video. Okay, so first, I want to share with you an email that I received this morning from the Daily Upside that said the founder of crypto exchange FTX may be in deep legal trouble. And it went on to read, is FTX CEO Sam Bankman-Fried the Elizabeth Holmes or Bill Hwang of crypto? After fellow exchange Binance wiggled out of a deal to acquire the firm earlier this week and backstop its massive losses, FTX finds itself seriously short on cash, be it real dollars, cryptocurrencies, or otherwise. Worse details are emerging that Bankman-Fried tapped users' assets to fund risky bets via affiliated quant trading firm Alameda Research, according to sources from the Wall Street Journal. This is inciting panic at the crypto. Now, if you're the type who's inclined to call the entire cryptocurrency revolution a fly-by-night scam built on a house of cards constructed by in-over-their-head huckstuckers and propped-up immature amateur investors, then, well, please read on, because Bankman-Fried, whose FTX is domiciled in the Bahamas, has helped steer a $32 billion company into one on the brink of insolvency in less than a year. Now, typically, exchanges like FTX make money solely by capturing big ask spreads on crypto trades. And according to the Wall Street Journal, FTX has engaged in far riskier crypto trading behavior, namely lending $10 billion of its $16 billion in customer assets to Alameda, which went on to engage in speculative trading, theft by deception. So conditions at the exchange started to crumble when crypto news publication CoinDesk reported last week just how intertwined the two companies are. The report revealed that much of Alameda's balance sheet is dominated not by Bitcoin or even fiat currency, but by the FTT token itself, theoretically a fictitious asset that FTX invented. The revelation triggered an old-fashioned run on the blockchain, and users slammed the exchange with $5 billion worth of withdrawal requests on Sunday. Now, FTX quickly paused withdrawal requests, but by Wednesday, Bankman-Fried told investors the firm faced a shortfall of $8 billion, according to sources from CNBC. Now, the 30-year-old CEO is searching for a life raft. The email goes on to say that Binance promptly backed out of the proposed acquisition while ominously claiming the firm's problems were beyond our control or ability to help. Sequoia Capital, a backer of FTX, announced Wednesday that it is writing off its roughly $210 million investment in the company down to zero. Bankman-Fried reportedly reached out to OKX, another exchange, earlier this week for help, and OKX is waiting for more information before it makes any decision. Quote, the goal of this raise will be first to do right by customers, second, by current and possible new investors, third, all of you guys, end quote. And apparently this is what Bankman-Fried told FTX staff earlier this week, according to the Wall Street Journal. Now, this is extremely insecure. And unlike traditional market brokers, it's unclear whether crypto exchanges are on the hook for misusing customer funds, meaning regulators may have no authority to help make customers whole. Huge losses, folks. The email says that, hey, crypto kids, it may be time to acquaint yourself with a couple of throwbacks known as the CFTC and the SEC. Now, that is some sound advice. So I was taught at a young age that if I plan to invest, then I must first completely understand what it is that I'm investing in, unless I plan to lose my hard-earned money. And back then, I didn't have very much of it to lose, so I chose to learn. And so some of you may have seen this video that was recently uploaded by Stefan, or perhaps you watch his channel or even subscribe. Now, I find Stefan to be a great creator and a huge financial resource. And so when I saw this video he published about FTX, it really caught me by surprise. Here, check it out.
So I've been waiting to talk about this since the situation seems to be changing every few minutes. But as some of you may have seen, FTX US has been a sponsor here on the channel for the majority of the year. Their international counterpart, however, FTX.com, has recently faced liquidity issues, disabled withdrawals, and because of that, I'm worried about the potential impact to FTX US. I think it's pretty safe to say as a result of that, I'm no longer working with them.
So Graham goes on to say that, fortunately, as of right now, FTX US maintains that they're a separate entity from FTX.com and that they're fully backed one-to-one and they're operating normally. And at the time of creating this video, Graham says, in fact, you're still able to buy, sell, and withdraw as usual, with the caveat being, although with everything going on, I'm not sure how much longer that's going to last. So he says, if you hold anything on FTX US, you can still take it out and transfer it to an external wallet or wherever else you please without any issue, allegedly. He also continues to say that now he really hopes that he's preemptively jumping the gun and that FTX US is fully back, as they say, and that there's not going to be any issue and everything will continue operating normally. Graham also said that he would love to be proven wrong for being overly cautious and say all of this was for nothing, but he'd rather be overly cautious to remind people to move their money off of the exchange, especially during a time where everything is still functioning. And that, of course, this just comes as a huge shock because he claims to have always been completely transparent about everything he does on his channel and everything involving personal finance, and said that he feels like he owes it to us to explain the situation and what's going on, and that as much as he trusted the information that he was given, he was wrong. And he is sorry he trusted them, but in the end, their parent company was not forthcoming with all of the risks, and this being one of them. Graham said that this type of behavior is not something that he would ever have expected, but if FTX US is at risk, he doesn't want anyone to get screwed, and reiterated that thankfully, all funds at FTX US are not currently impacted, and he prays it stays that way. But at this time, he knows just as much as we do at this point. And what I know is that there's going to be a run on FTX and FTX.com and FTX US, which is going to drive the liquidity issues up to the surface, and there's going to be some folks out there left holding the bag as this company plummets down to its actual cash value of zero, in my opinion. So after watching everything transpire outside of the US with FTX.com, he wanted to give you his full thoughts so that we, his viewers, will all up to date and reinforce how, again, he does his very best to research and vet everything that comes his way, and this one he just did not see coming. So Graham also goes on to mention how he has also personally used them as an exchange because of how trusted they were in the industry, and he saw that they were backed by really big investors like BlackRock, Tiger Global, and Sequoia Capital. So he didn't think that this was ever really a possibility of even happening, but unfortunately here we are. Graham appears to be genuinely appreciative for everybody who watches the channel and said that means the world to him and that he would not be here without us all. He thanks us all for hearing him out and continues to say that he really hopes this is all for nothing. Wow. That is quite a mouthful and really leaves you on edge and with so many questions left to be answered. And will they go unanswered is the real question. And perhaps even worse, how much of people's net worth will be lost while we wait for these questions to possibly be answered? And it isn't just Stefan who's feeling the pressure of having their good name and reputation dragged through the mud on this one. And perhaps a substantial percentage of their net worth, or even worse, their freedom, as the potential threat of criminal action, court proceedings, and possible jail time in prison has to be racing through their their heads by being affiliates, promoters, endorsers, and in some cases, equity share owners of the possible cryptocurrency Ponzi scheme like Tom Brady. So I recall having watched Steph Curry about a year ago mention his involvement with this company FTX with his wife Ayesha Curry by his side. And he said, and I quote, "I think we're obviously at the beginning state. I know it's been around for a while, but from a mass awareness perspective, understanding how this is going to be a part of the next generation of how they think about financial opportunity, and that having access to that, and right now it's just about education in terms of what it actually is and how it can be leveraged in the proper ways." Curry said that there's a big community right now that is excited about what this will mean for democratizing the financial institutions and how we do things. So it's about educating the next generation, while adding that both he and Tom Brady both signed up with FTX and immediately saw a little dip in the Ethereum price after that launch, and admitted that it's a volatile kind of market right now, but the long-term prospects are very positive, while referencing Tom Brady and that partnership is specifically to create a socially conscious platform within crypto. Do you think that's what Sam Bankman-Fried is doing right now? Creating a socially conscious platform within crypto? Well, Steph also said at the time that the founder of FTX, he's very committed to that and is setting a standard for what it means to be socially responsible within the success of the crypto. And Steph Curry said, "I can get behind that as well." Hindsight is 2020. But now, one has to think, did NBA superstar MVP and mega millionaire know what he was getting himself into at that time? Was this all an elaborate plan to scam money, billions of dollars out of the hands and bank accounts of so many people, companies, and businesses? Or was he a pawn in a game that was started by FTX Trading Limited CEO Sam Bankman-Fried all along? So obviously some of the big developments in the story at the moment now, and the thing that most people are talking about, is this tweet thread from Sam Bankman-Fried that appeared yesterday, in which he apologized multiple times and seemed to take responsibility for the whole, as he called it, shit show. But it raised as many questions as it answers, and in fact, you might say that it didn't really answer any questions at all. And what one of the things that he talked about was that him and other FTX staff were working to find some kind of bailout, maybe someone who would buy FTX now. And honestly, at this stage, folks, I think that that is a very, very, very unlikely scenario. FTX is currently under investigation by multiple U.S. agencies, and it's also under investigation in the Bahamas, which is where its headquarters are, with reports of the FTX main headquarters shut down by authorities in the Bahamas who have frozen FTX assets there. Now, all this on top of the fact that there's a multi-billion-dollar hole in its finances. So I just don't see any possible way for this to play out with another business who would be willing to invest in FTX and who's going to want to take that on. So I'm afraid that that's obviously bad news for people who have their funds stuck on the platform. But honestly, we just got to be realistic about that. But what I do want to point out is that there's technically a separation. And I want to make sure to be clear that we differentiate FTX.com from FTX.us. Although Sam Bankman-Fried is tied to them all, and FTX.com is the parent company of FTX.us. So, potato, potato. Meanwhile, the internet is showing extreme opinion about the recent actions and statements from Sam Bankman-Fried and his vague tweets. Like this one comment here: Sam Bankman-Fried is not sorry. He's only sorry that he got caught. He wasn't sorry until the moment his castle collapsed and would have never stopped effing up otherwise. And how does sending a meaningless tweet mean he is taking responsibility? Taking responsibility would mean delivering himself to the authorities and giving the keys to whatever funds he does have available to some trusted entity that would pay users back as much as possible. Anything else shouldn't be taken seriously by anyone. So what now? That's the big question. With FTX on the verge of collapse, what happens to everyone involved in this mess? The Miami arena that was named after FTX, celebrity athletes, Formula One, etc. Well, the Miami one is interesting because it's the county itself that owns the arena. It was originally a 19-year deal for $135 million, and we're only a couple years into it. And so Miami has already come out, according to the information, and said basically that they'll do whatever it takes legally if that's where this goes. Now, there's no doubt that this will be a fascinating thing to watch, and basically they either get their money in bankruptcy court or they just rip the name off the stadium and they never see the money again. And that has certainly got to hurt the city of Miami and Dade County if that happens. And from there, they'll go and they'll get a new sponsor and they'll put a new name up there, and hopefully the new company is more successful than FTX has been. To me, this kind of looks like a repeat of what happened during the dot-com boom, where we saw these names kind of disappear overnight. But you know the old adage, play stupid games, you win stupid prizes.